so I was born and raised during the good old times. So as any half-smart boy was supposed to be, I was supposed to be an engineer. And so I studied computer science in high school and university. And I was convinced that I'm going to be a programmer. But somehow I kind of figured out that I didn't have the patience to be a proper hacker. So I was more towards the product side. I had no idea what product meant at the time. But funny enough, in the last year before graduating, I realized that there was a Canadian MBA program which was being offered in Bucharest. And our idea at the time was to immigrate to Canada. That was the one place where we could immigrate legally, where being a programmer was a big plus that would help you immigrate. So I thought that if I study computer science and I do a proper MBA, a Canadian MBA, I would have more chances to immigrate. So I signed up for that. But in the process, it was actually something that blew my mind, because when I finished university, I had no idea what a company is. I had no idea about accounting, about legal, about jurisdictions, or anything like this, marketing. And what I studied in that program was very new, strange, but very interesting to me. And by chance, after graduating from that, I got hired in the equity research department of a local brokerage. Not local. It was an international brokerage, and that was purely by chance. But this got me into the investment world, and very quickly I found out that it fits me better. I had much more interest in that than in being a programmer. And I started from there. So I was looking at companies on Bucharest Stock Exchange. Then I was looking at companies internationally. I moved later on. I moved into private equity because pretty quickly on equity research, I realized I want to be on the buy side. I wanted to make decisions, not to be a consultant. So I wanted to be a principal. I moved into private equity, and from there, by chance, I learned that Intel Capital was recruiting somebody for the region, and I said, okay, fine. I like technology. I know something about it. I'm interested in investment, so I'll move there. It wasn't intentional. It was just by mistake, but it happened. And from Intel, once they finally decided to fire me, I joined Earlybird. Yeah, there were early startups. There were classified startups. There were social networks. Neogen was still going strong at the time. Okazi was set up. All the group around Okazi was fairly active. I think EMAG was started around that time, but it wasn't something that I was very much aware of. Luckily, I had a regional brief, so I was looking not only at Romania, but I was looking at Southeastern Europe, so I could have a bit more understanding about what's going on. I mean, everything was pretty bland and not terribly interesting. But I mean, it was a learning process for me. And there was also a time when Intel, as an investor, Intel Capital, was pretty much the only game in town, until somebody else much bigger would swoop in, and Tiger was with LeafXL was quite active and aggressive, and competing fairly successful with whoever was not on the ground. There was no ecosystem. I mean, there were some There were, of course, the outsourcing companies, local, international, and very few product companies or platforms. Again, social networks. There was a lot of Me Too that was happening at the time. But this was pretty much the same case all over the region. There were a couple of product companies in Bulgaria. Slovenia seemed to be much more advanced than us, and that was a bit surprising to me because that's a country of 2 million people, with only 300,000 in Ljubljana. But I was spending there maybe 25% of my time. In Eastern Europe, people were still focused on making the first money, and the governments, I mean, were as idiotic as ever, pushing outsourcing, which actually created an important vacuum in the market because a lot of people got sucked up into doing services instead of having programmers available to develop products. The reality of the region is that we do need to have government funding in order to start the ecosystem. But government funding, as a rule, is quite toxic. And what happened is that in Poland and in Bulgaria, they were smarter earlier than us, because they found out that if they put the government money in somebody else's hands and let them manage it, this can be successful, as opposed to Hungary, which actually took it into its own hands and created a coterie of government-friendly funds that basically did nothing. And actually, that was what happened in Bulgaria was quite revealing to me, because that was, I think, back in 2011 when Launch Hub and 11 were formed. And I already knew the market, and I knew that pretty much nothing was happening there. And to my surprise, from $20 million in funding overall, in between two funds, all of a sudden there was a lot of activity. I mean, there were hundreds of companies being established, and that was surprising because the maximum they could provide in funding was 200K. Even more surprising was that companies from outside of Bulgaria would choose to move their headquarters to Bulgaria in order to get access to the 200K. So there was obvious that there was a huge need for this type of early stage funding. And yes, money availability drives company creation, if done right, and avoiding corruption and all kinds of funny business. But it was interesting that it worked. In 3 years, I think they made 260 investments in between the two funds, with companies from Cluj moving to Bulgaria. I would have never guessed that this would be possible. Around that time, it became apparent that there's regional funding available, very limited at first, but people were looking. There was this mini bubble around 2011, 2012, all the way to 2015. That a lot of people were trying to get away from more established markets into less explored ones, and you would have Sequoia and Index traveling to Istanbul, for example, every second week. Of course, things are quite volatile, so they did not really follow through on that. But for the region, just the mere appearance of interest from potential sources of capital was quite inducive to people actually starting to form companies. And there was another thing. I think about that time there was the if you want, the coalescence of teams that were realizing that doing services and outsourcing was not the best thing that would drive their success. Also because the number of programmers dropped. People in the market were already, a lot of people were hired by the multinationals. And they thought that the other way of making money is to create a product. It also, it's interesting that when I joined Intel in 2007, one of my investment themes was to assume that out of the hundreds of outsourcing companies, there would be some that have the expertise to create products. And most probably I've seen over 100 companies, maybe 150 companies. But I've seen only 2 cases where they were able to make this transition, and it took me some time to understand why that was the case. And in the end, I understood that it was a cultural thing, not cultural from Romania, but cultural in terms of mindset of the people that were involved in outsourcing as opposed to product companies. Because basically, in an outsourcing company, you know or the owner knows every single time how much money every person makes. Whereas with product, you never know that until you have product market fit. So it's a very different mindset. You cannot have the 2 mindsets under the same roof. And in the end, the only ones that were successful were those that made a clean break and ended up creating spin-offs in which the teams split in 2, and one chose to stay with the outsourcing company and the other one with the product. And the FinTech OS, for example, is a good example of that. So by that time in 2012, I joined Earlybird, and we understood that we have to be generalist investors, because the markets, while providing some snippets of interesting companies, were not deep enough, meaning that you could not really specialize in specific sectors, because you could not bank on having enough companies to create a portfolio of investments in any given sector. In many cases, things in which we invested later were not even on the table at the time when we created the fund. So this meant that we looked at everything that we found into the market. We could look at it, and this is how we ended up investing in everything from consumer services to marketplaces, of course B2B, even hardware. Just because we had to look at different things. I don't think there's a defined place for Romania or for any of these countries in terms of where they are or where they should be. First of all, when you think about the emergence of an ecosystem, I would challenge the concept of an ecosystem in these markets, which are very secondary. But just the emergence of activity is not linear. So it's not like things are starting small and then they only grow up. What I could see was that the level of company creation and the interesting things that were coming from the market would come in waves. So one year Romania would be more interesting, and then the next year there would be more interesting things in Bulgaria, and nothing would happen in Romania, and so on. Valid for Poland, valid for a lot of the other places. It's just that there's not such a big population of companies and big enough population of entrepreneurs to create the numbers that would create a mass movement along a clear path. There's a structural lack of capital in the region. A lot of it was addressed with the early stage funds. Some places like Poland overdid it. They put too much money into very early stages. But now, once companies need to raise Series A, B, and so on, the capital in the region cannot fulfill that role. And I'm sure there will be growth funds that will be that will appear in the next couple of years, especially because we have a population of early stage companies that were financed from these funds, and some of them are making good progress, and they need additional capital. No, it's structural throughout the region. There is no institutional capital dedicated to investments into technology in the region. Banks are not doing it. Insurance companies are not doing it. Pension funds are very limited in their ability to do it. There's no endowments. The private capital is limited. So that just the lack of capital, the same way people were not creating companies at the early stage because there was no 20 million available in the region. It's the same thing with later stages, and that's why people tend to raise from more developed markets. There's also in more developed stages, it's also the issue of expertise, because as you reach certain stages of growth, the type of skills that you need in order to progress is different than what you can find on the street here in the region. And you need to go out, and you need to recruit outside. You need to have investors with different skill sets that would help you develop. It's always the same. I mean, markets are competitive. Most probably this means that there would be a higher mortality rate among the companies that could make it, but it's just life. You cannot have an endless supply of money. And it's not the case that you need to have all the companies survive, because some of the teams that will fail will come back and do another startup. To a certain extent, maybe they will be get down to earth, because I think that the entire bubble that was created affected investors as well. Investors were somehow reacting to the environment, but the ones driving that and benefiting the most from this were the founders, which were the first. I mean, being entrepreneurs, they were the first to spot the opportunity and push up valuations, talk mambo jumbo about global ambitions, and everything was going to be a unicorn and so on. Now people need to understand that they need to come back and think about business is not about funding rounds. There was a lot of Lego chasing. A lot of people wanted to be part of the cap tables of well-known companies, because that would drive their ability to fundraise. But that was just a measure of how much money was chasing marginally profitable investments. Many of these investments turned out to produce very little return, because they were made at such high valuations that in the end they returned very little of the fund. It depends on how you define big. I mean, I met Daniel because I being based here, I was meeting everybody. I was impressed with the very simple demo of their platforms, but I liked him quite a lot. I think we connected quite early on, and I mean, I thought that's gonna be something big, but my thinking of big at the time was that this could get to 500,000 in value. Obviously, I mean, if I would not say that I envision that UiPath will become a unicorn or a publicly listed company or that even Daniel would become the CEO of a publicly listed company. So that was not the case, and actually this was underlined by the fact that we tried to get co-investors, and almost everybody said no. And we only had one co-investor, two in the end, but that was it. 14 others said no. There were a lot of stereotypes. How can a Romanian company compete with a US company? How can somebody from Eastern Europe make it into the global technology market? So a lot of stereotypes. People did not understand because RPA was not a good concept. Whenever I was talking about robotic process automation, people would understand robots and they would say, "We don't invest in hardware." Okay, so there were a lot of challenges, and some of them very well deserved. Daniel has to take all the credit for that because he was the one that made the most changes to himself. He was an engineer that spoke broken English, and he became the CEO of a public company. I think I recognize that he's the one that deserves all the credit for the success, because the other companies had as good teams, as good programmers maybe as UiPath, but he was driving the company harder than the others. There was more humility, there was more flexibility, there was more speed because of that. People wanted to prove something that yes, we can compete. And now people, in the face of the obvious, people do acknowledge that yes, this is possible now.
What other Romanian startups do you think that have this potential of becoming unicorns in the near future?
I don't like this concept of unicorns because it's such an artificial measure of success. We had years of 10% inflation. What do we do now? We talk about 1.1 billion valuation in order to keep people straight. Or are today's unicorns less valuable than yesterday's unicorns? It's not relevant whether you get to a certain number. I think it's much more important whether you have success, and you have success in more ways than one, in more markets than one. Then yes, this means that you have the potential to become a big enough company that it's worth taking note of. We were as impacted as everybody by the crisis, which meant that we pushed earlier and earlier, with valuations going up and fund sizes staying flat, basically. In order to get meaningful stakes in companies, the only way to do it is to invest at lower valuations. Lower valuations mean earlier stages, which basically creates a risk because you have less validation by the time you invest. There's this misconception that I actually hear it from entrepreneurs as well, that we want to take risks. We don't want to take risks. That's very idiotic. We want to take less risk. We already know that we take risks, and the less risks we identify, the less risk we can control, the better for us. We are not gamblers. So investing earlier is more risky because you have less proof points. We invested in companies that had no revenue, where the product was not there. So this is much more risky, and I think this will show into how funds will perform. My first company I invested in, it was T-Jobs. I had high hopes for the company, and we lost it all. I mean, there was a combination of team structure and, of course, my favorite subject, the influence of the government. The government decided from one day to the other to not to change the law, but to reinterpret the law, which basically killed 90% of the revenues of the company. I don't know. I don't follow much the government these days. I try to keep myself sane. But usually when we invest, we try to insulate the companies as much as possible from the local political impact. And even with T-Jobs, we thought that we have it clear. We got before we invested, we identified correctly that there might be a risk, and we got a legal opinion saying no, that's correct. But then the government did not change the law. They just reinterpreted it. But the local markets being so small, they are basically meaningless. It's important in terms of quality of life. It's important in terms of costs. It's important in terms of people's ability to travel, but not much else. And I actively discourage companies I invest in to work with governments, and that's if you want a personal preference. First of all, we generally invest through SPVs that are located in other markets, not because of taxes. It has nothing to do with taxes, but simply because of the legal systems and the flexibility that it allows us to in terms of structuring. But this is very secondary. In terms of actual presence, yes, they need to move, and they need to move the sooner the better. And these days, I actually think that moving to US sooner, because a lot of times we were thinking that UK or Western Europe is a good stepping stone, but it proves that going straight to US is a much better option. When I talk about moving, it's mainly having the CEO travel more often, maybe spend 3 months a year in there, having resources that support customers there, making an active effort to sell to customers and to adapt the product to the market needs. People have much better understanding that the path to becoming unicorns is through being a product company. So there is no outsourcing company that is a unicorn in the region. So people are, especially at early stages, are much more focused on products and globally relevant products. They're not trying to sell to the government or to whatever other public entity here, and at the same time they did evolve with the fundings. They understand that there's competition between funds. There are more options to invest. They can talk to funds from not only from Romania but Bulgaria or Poland, or go to London. It's not such a long trip. They were as affected by the general availability of capital and pushed valuations up. They did stupid things in order to increase burn and chase the next funding round that would bring them to unicorn status and so on. So I mean, it's pluses and minuses. People learn and adapt to the environment, and the environment is not Romania. The environment is a much more global environment. In order to become a product and to have a chance of being successful, people need to come up with something unique. The way people define unique is obviously, if you look at most of the pitches, they are very unique, but it's very unique within a fairly narrowly defined sector. And of course, you can define it as narrow as you want in order to become unique. But yes, there are new ideas. At the same time, there's much more competition. So my working assumption when looking at the company, even if I cannot find anything similar, is that there are 10 other teams that nobody knows of somewhere in the world, from China to India to US, that are doing pretty much the same thing. And that should be the assumption. Because there are, I mean, the creation of so much wealth through technology drives interest, drives people being competitive, and being competitive means that they will do whatever it takes. You never know. I mean, you need to make decisions under uncertainty. The smart investors understand what are the variables that are uncertain, and you need to have. I mean, it's not obvious that people don't want to make investment to make decisions, but people. If you ask 90% of the people, they want to be executives. But out of those, less than 5% are willing to make decisions. They just imagine that they are going to have somebody work for them. And I think that's the defining quality of an investor, especially in technology and especially in early stages. Be comfortable with making decisions with a lot of uncertainty. I mean, the good thing is the creativity and the flexibility, which drives a lot of innovation. What's bad is the lack of trust in their potential to compete. I will continue to stay active and continue as an investor. So I'm always looking to meet people and understand what are the things that can be successful. And I think I hope that this will happen in the future. I have to believe that one success is not the end of all successes, and I believe in luck. I think you have to be lucky. Hopefully, we'll get all lucky and see more successes. The measure of success is not an ecosystem. You don't need an ecosystem. You need an ecosystem. When they first created venture capital funding, they needed an ecosystem because they needed people that would understand what was going on. But now there's so many, and you are not bound to a very narrow geographical area that you don't really need an ecosystem. Hopefully, there will be more driven people that will have the skill and the imagination to create interesting companies, and this would reflect on the others, because in the end, success begets success. And we've seen this with even with UiPath, where a lot of early employees left the company by now and created other companies. And I think the good thing about that is that they have the ability to understand that they can have the ambition and they could have global success. I know what I don't like. I'm not a consumer guy. I don't understand consumers, and I don't touch crypto. So crypto and Web3 and this are very strange to me, and I actively stay away from them. But apart from that, I looked at everything from developer tools to analytics to databases. I mostly focus on B2B software and deep tech. Out of nowhere.